In my portfolio, I hold 200 shares of SoFi Technologies, up around 50% from where I bought it. So in today's video, I want to discuss SoFi's upcoming earnings that are set to be announced on October 29th, as well as discuss the state of the banking industry as a whole, because we have seen earnings from JP Morgan, Wells Fargo, and we'll soon see earnings from Bank of America. So if you enjoyed the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. Let's start by taking a look at the portfolio. The total value is sitting just under $54,000 with a year change of just under 92%. However, keep in mind that this 92% takes into consideration gains as well as deposits. And within this portfolio, I hold Alibaba, Apple, Microsoft, Palantir, PayPal, SoFi, and Visa. Keep in mind that this is my smaller portfolio. I do have a larger main portfolio that I primarily focus on. This one is where I share my YouTube holdings, and one of those holdings is SoFi Technologies. If you look at my cost basis, I actually own these shares at around $5.95 per share. So with SoFi running up around 7.5% in the last 5 trading days, that has had a good impact on the portfolio. However, year to date, the stock is still down around 6.6%. SoFi bottomed out back at the end of 2022 when the stock price hit around $4.30 per share, and it's still far off of its all-time highs of around $25. From that point till now, the stock has actually fallen almost 65%. Over the last couple of years, the banking industry has been in a very weird spot. Around a year and a half ago, at the start of 2023, we saw the whole situation with Silicon Valley Bank as well as a number of other banks going under. On top of that, with interest rates fluctuating up and down, it's been difficult for a lot of these banks to give out loans with consumer spending pulling back. However, on the other hand, they can offer higher interest rates and have attracted a lot of consumers to put money into savings accounts. And that actually brings us to the current state of the banking industry, where we actually have 2 positive factors working for a lot of these banks. We are seeing interest rates come down, thus more consumers being willing to take on loans, as well as still relatively high interest rates overall, resulting in better than expected interest income. And overall, this has had a big impact for companies like JP Morgan, who just announced their earnings on October 11th. They came through with a 9.6% beat on their EPS numbers, reporting $4.37 of EPS compared to analyst expectations of $3.99. And they also beat on their top line numbers, coming through with a revenue surprise of 3.09%, reporting revenue of $42.65 billion. And this almost 10% beat on EPS numbers is being driven primarily by net interest income. So much so that the company actually raised their full year guidance for 2024 on net interest income to $92.5 billion. And if you're wondering what exactly is net interest income, according to Investopedia, it's the difference between the revenue from a bank's interest-bearing assets and the expenses on its interest-bearing liabilities. A very simple example of this is if the Fed's rate is currently sitting at 3% and they are offering you a savings account at 2%, they're pocketing the difference between these two interest rates as net interest income. And it's actually easier for a lot of these banks to capitalize on net interest income when interest rates are higher. When we start seeing interest rates drop, it actually begins to squeeze some of these margins. So for now, JP Morgan, after this earnings announcement, has actually ran up around 4.5% in a single trading day. And this trend continued over to other banks as well. For Wells Fargo, they reported their earnings also on October 11th. However, their surprise on EPS numbers was almost 20%, reporting $1.51 of EPS compared to an expected $1.28. However, they did miss on their top line numbers, missing by about 0.5% on their revenue, reporting $20.37 billion. And these results sent Wells Fargo up around 5.5% on the trading day. And when you see positive EPS numbers coming through in a certain industry, it tends to translate to other companies within that industry as well. Bank of America is no exception. They moved up almost 5% on the day as well. And these results are likely why we saw SoFi move up almost 4.5% on the day as well, because they are not expected to announce their earnings until October 29th. And at that time, analysts are currently expecting EPS numbers to come in around positive 4 cents and revenue to come in at $631.6 million. And overall, I think SoFi will continue this trend of seeing positive net interest income. If we look at their consolidated numbers last quarter, they came out to $412 million of net interest income. Year over year, that's an increase from $291 million of net interest income. And this has primarily been driven by growth across their lending segment, which was sitting at $231 million in June of 2023 and is up to $279 million in June of 2024, as well as their financial sector. Their financial sector has grown from $74.6 million in June of 2023 up to $139 million in June of 2024. And this net interest income in their financial segment is primarily being driven by deposits. We can look at how their margin has changed over time. In Q2 of 2023, their margin on their net interest income was sitting at 5.74%. In Q2 of 2024, that increased to 5.83%. However, in the third quarter, I expect this trend to actually reverse. I think year over year, we might see a decrease in their net interest income margin because in Q3 of 2023, their margin was sitting at 5.99%. It appears to have peaked in Q4 of 2023 when it hit 6%. So I would expect here in the third quarter that they'll be sitting probably around 5.75 to probably 5.8% in terms of their net interest income margin. However, just because their margin has peaked doesn't necessarily mean that their net interest income is going to start to decrease. A lot of these larger banks like JP Morgan, they have hit such large numbers that their margin really matters. However, for SoFi, because they're continuing to grow their member count, we could still continue to see their net interest income increase. And we should likely see that because year over year, they've been increasing their member count by 40+%. And ultimately, this increased member growth year over year is going to be one of the best things for SoFi as they start getting more people into their ecosystem. Here is actually Anthony Noto, CEO of SoFi, talking about how they have strategically built out this ecosystem to get people using more of their products.
In fintech, there's not a lot of talk about product design and product market fit and the application experience, but those are huge differentiators for us. And I'm actually glad no one talks about it because they don't understand how important it is. But we architected our digital wallet, or the equivalent of a checking savings account, SoFi Money. We architected it such that the value you get will only be unlocked if you're willing to make us your primary account, i.e. do direct deposit with us. So our 4.6% interest is really high, but you only get that if you do direct deposit. You also get no fees, you get reward points, you get a free certified financial planner. You can pay your bills any way you want. You can mobile upload a check. We give you access to your capital faster and quicker than most firms would because we have all the information on you.
For me personally, I'm excited for SoFi's upcoming earnings. As I mentioned earlier, the average EPS estimate is sitting at positive 4 cents with a low estimate of positive 3 cents and a high estimate of positive 5 cents. This is up massively from a year ago when they announced negative 29 cents of EPS. I do believe that SoFi could actually beat these high estimates for EPS. They could come through with maybe 6 or 7 cents of positive EPS. One thing to keep in mind is that this does not necessarily mean that the stock will go up because we're already starting to see these positive announcements from other banks, and that's getting priced into SoFi's stock right now. So as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day. And for the joke of the day, how do ghosts stay in shape? Check the comments down below for the answer. Thanks for watching.